All right, let's bring in now Liz Young from SoFi. I mean, John Malone, one of the world's richest men, the biggest landowner, I believe, in the United States. I mean, not somebody whose opinion should be trifled with at all. Do you agree, though, with him, Liz, that there is kind of a land rush, this everything rally, just buy whatever you can?
Well, I agree in the sense that there's a lot of optimism, almost this invincible optimism in the equity market. And we obviously have had a lot of new investors. Well, it can be, Brian, but it's because also we've had a lot of new investors enter the market, and they're excited and they're learning about investing. And I think that's a really positive thing. There are some differences about what people are investing in today versus what they were investing in the late 90s. I mean, in the late 90s, we were investing in technology ideas, right? We were kind of sitting back, crossing our fingers and saying, we hope this works out. I think today, when you look at those big tech stocks, it worked out, right? And now the economy is different. Those big tech stocks are the future of American prosperity, and things have really matured a lot in the sector since then. So I don't think it's quite the same.
Well, yeah, listen, I posted a picture, I don't know, a couple of months ago, Liz. It was a Forbes cover from, I think, middle of 1998. It was a kid, a 25-year-old on a computer, and literally the headline was basically young traders set to teach Wall Street a lesson. And there was also digital currency back then. We forget about that. And it was how old people don't understand anything, and it's a new market. And, of course, 2001 happens. I love the optimism. I love the interest. I love the action. But let's be clear. Markets can't go like this forever, or can they?
That's true. They can't go like this forever, but I think what's going to shift is that different things will drive it. So I don't know what necessarily happens in the next couple of weeks. I don't think that any investor should make moves based on what they think is going to happen in the next couple of weeks. But even if we hit a patch of volatility here, I do think we're going to see some yield curve volatility into the end of the year. But I think that that cyclical trade, that reopen trade, some of the things that Steph was just talking about, stays in place in the beginning of 2022. And we are betting on the consumer quite a bit through the end of the year here. And I think the consumer stays strong. This is a very goods-heavy time of the year. Obviously, the holidays are coming. We're going to keep spending. But we get into 2022, and that's where we might hit the skids a little bit because of inflation. We start to feel the effects of that. So the timing is important. And I think you have to make your bets in the places that are that cyclical trade, things like small caps, things like industrials, financials, even materials to some extent.